So we saw a breakout of this downward trend line that starts all the way over here on May 1st. You can see we've had numerous rejections off of this trend line, and also we found numerous supports along this trend line, this red one right here. This red one, if you go to the daily chart, and if you've seen our videos before, this is a part of the pennant pattern that we have the two red lines here. This would be the support for the lower one, and then the top one, of course, would be the resistance. And really, price has been pinned to this top level. Lately, we've seen price discovery a little bit over, as you can see over here in mid-April. We've seen it over here in early May, but then also we've fallen down to test around the middle of this level, around that 4,050 level, which is going to be very critical going forward, and I will mention why that is in this video. But still, we have reverted back to this trend line every single time, and as of today, as you can see here on the hourly chart, we did break out of a mini downward trend, and we're able to bounce off of the pennant trend line. So far, just based on today, it was a clean breakout, at least from the consolidation we saw from the past week. We have yet to have a breakout from the entirety of the consolidation from over a month now, but in terms of the past week of consolidation, we did see a breakout above. However, the next part, which is exceptionally crucial here, is based on this chart. You can see we do have a very strong supply zone just above where we closed today. So this supply zone is going to be everything. We have the convergence of this gray trend line, which is the one from the 2018 high that I've mentioned in previous videos, and then also we have this supply zone that's acted as a supply zone as well as demand zone numerous times along the course of the last couple years. So this is going to be very crucial, and my expectation is this will likely get tested tomorrow, especially after the open. We'll see if the market wants to close this gap specifically over here. No worries if it does. However, the big battle will be around this 4,170-ish level. This is going to be very crucial that bears are able to hold it under. My bias is still that we will have this double gap fill below, and it should happen fairly soon. So this would require quite the rejection, especially heading into Opex on Friday. We did have VIXpiration today, which is crucial to note because a lot of open interest on VIX options was able to expire, which can lead to more volatility heading into the end of the week. An interesting thing with VIXpiration, the day after, which falls on a Thursday, tends to have a lot of volatility. You can look back at every single VIXpiration and you'll see characteristically there is a very wide range on VIXpiration day. We actually tend to see about 80 points on that day afterwards. We've seen upwards of 150 points. That's not my expectation for tomorrow, but you tend to see a very large move. Now, it could go in either direction. Back in 2022, it tended to be more so skewed to the downside, but still do be careful of that tomorrow. It tends to have a lot of volatility, so bears are definitely going to want to use that to their advantage, especially if we have a quick run up off of the open to around this supply zone range, because there's a potential here of a head and shoulders pattern after consolidation. Not necessarily the best head and shoulders, so not the textbook version, but still head and shoulders nonetheless. We have the higher point here for the head, the left shoulder over here, as well as potentially the right shoulder forming here into end of week with that rejection following. So do be careful of this. If you are a bull and are excited of the breakout from today, you do want to see a break above this supply zone next. Again, it is, in terms of just today's daily candle, it is bullish in a technical stance of the daily candle. However, you need to get above this range here, otherwise it wouldn't matter, and you can see a very hard and equal rejection compared to the daily candle we saw today. So just keep that in mind. The supply zone is very strong along with the convergence of this trend line. Then of course we have this potential right shoulder forming. So there hasn't been a range breakout or breakdown yet. Remember, we'd have to get below 4,050 for there to be a range breakdown, as well as get above around this 4,180 to ideally 4,200 for there to be a clear breakout. That has not happened yet. So yes, we did have a bullish daily candle if you just look at the close from today. However, we're still range bound, so you still have to treat it as it being range bound, and it can most certainly reverse if it chooses to do so. So keep that in mind going forward. Something I do want to talk about as well was today we had 4.8 billion in premium at the 410.34 level on SPY. This is a lot of premium. Very rare we see over 4 billion in premium. We actually saw it 2 weeks ago on Tuesday. We saw about 4.8 billion again, but still we hadn't seen that large of a print in 2023 yet. So having two 4 billion plus back-to-back prints in about a 2-week time span, very rare to see that. 410.34, watch this level going forward. It is definitely below where we closed today. However, I'd like to see how the weekly plays out in terms of confirmation before assigning a buy or a sell to this level. We've seen a lot of these prints, at least a lot of signature dark pool prints at around the 410-ish level, which tells me one thing for sure. Once there is a breakout of the range, whether up or down, it will lead to a very large move, will be very extended, especially with the fact that we've had so much consolidation around this range. It's acting, like I mentioned in the previous video, as a coiling spring before it decides to break to a direction. My bias, of course, is still down, but nevertheless, we will see very soon what it decides to do here. Of course, we have tomorrow coming up. Potentially, it does want to fill this gap. It would be the last gap of this entire segment that's been left unfilled. If it decides to fill that gap, watch for some form of a rejection off of the supply zone following that, because this is a very key zone. So that 4,160 to 4,170 mid range is going to be very crucial heading into the end of the week. So do keep that in mind. Also, I want to mention NDQ. So NASDAQ here did have a clean breakout of this ascending pattern so far. So it was able to exhibit strength yet again. Relative to the rest of the market, the NASDAQ has been by far the strongest of all the indexes if you compare it to the Dow, the S&P 500, and as well as the Russell, which would be the weakest. So tech has remained very strong. We will see what happens going into the end of the week, of course, but still this did have a clean breakout above, and really tech has been the main carrier of the rest of the market. It's been able to help the rest of the market stay propped up. So if tech were to exhibit weakness in the future, that would weigh a lot more on the rest of the market. Again, for example, like the S&P 500, the Dow, Russell, etc. And speaking of other indexes, I do actually want to go over to the dollar on this chart because something very crucial is happening here in terms of the overall structure that actually is interesting considering today's move. You can see here on the dollar, this is a variation of a cup and handle, not exactly the perfect cup and handle, but still we do have a curved bottom over here, followed by some form of a pullback after the breakout, as you can see over here, and then it bounced off of this trend line as well as that pullback and has continued to the upside. This is actually a bullish reversal pattern, and typically when we see extended upside or a lot of strength in the dollar, it does bring weakness to equities, especially in the industrial sector, so that would hurt the Dow the most, but still it most certainly weighs on the S&P 500 as well. And again, based on today, we did see that rally and that breakout in the S&P 500. However, the dollar was able to remain strong throughout the day, so it is calling bluff on the rest of the market, and typically everything will correct itself within a couple days after. You tend to see one calling out the other, in this case the dollar calling out something like the S&P 500. So we will see, especially going into Opex, which one is right in a sense, but still the dollar exhibiting a lot of strength so far, was able to bounce off this trend line. And again, if looking at this daily chart over here, you can see it is en route, at least in my opinion, and based on this weekly close, if we get another one above this trend line, it would be en route to around this 104 high to roughly 105-ish range. This is the supply zone, previous supply zone that's acted as a hard resistance before, as you can see over here numerous times. So far, we're seeing a lot of strength in the dollar, and if that continues, again, that will bring a lot more weakness to the rest of the market. So this is something to keep in mind. And last note for today, look at where the S&P 500 rejected off of from today. You can see rejected right off this orange trend line. And of course, if you are subscribed to this channel, you know exactly where this orange trend line is from. And this is going to be something that's very crucial going forward. If you are new, you can see this is just a very basic trend line from the 2009 low. It goes all the way back to the great financial crisis from back here, and it's acted as a hard resistance numerous times. So it is only fitting that it would act yet again over here as a resistance. But do note going into the end of the week that this weekly candle close will be very crucial. We haven't had any decisive, at least back-to-back weekly candle closes above. You can see every single time we've actually had a weekly close above this level, it's acted as a fake out. Can go all the way back to over here in September of 2022. We had a close back above after we had a close for this original breakdown from August, and then it continued falling after. We also have a close back above over here in November, followed by further downside. Same exact thing over here in January. And then recently we actually had a close above from over here, but it was unable to hold. So far we are retesting it yet again this week. So it's no surprise we did see a rejection, at least end of day from today. And I am very interested to see where the weekly candle closes by the end of the week. Very crucial here, especially off of such a critical trend line. So to summarize, make sure to watch this supply zone as well as trend line convergence up here. Going to be very crucial heading into the end of the week for Opex, especially into next week. We have yet to have a breakdown of the range. Again, 4,050 would be the lower end with a minor support around the 4,100 level. But the main one, at least for the upside, would be around that 4,180 to 4,200 level. Unless that is able to break, you will not see any extended upside. And the same exact thing applies to this lower level of 4,050. So again, watch the supply zone going into tomorrow, and I will see you guys next time on Sunday.